for everybody. Julian, what do you think? I think you got the talent to do that.
I mean, it's so long as I'm presented with 3, 5 subjects or some other thing, and I can, it's basically an MC job, right?
Yeah.
So I'm at ease with that. That's totally fine. We're recording now, by the way. This is
Yeah.
this will go live, and
Cool.
so and Andy is out, and so I'm fine with that. And like I said, I think the key is consistency and no pressure.
Yep.
And so long as we're
Rawness.
able to do that, then I think that doesn't matter. But like there was a recording hiccup. Why don't you tell us, this was your idea originally. Tell us what your vision was for the thing. And by the way, if you're listening, like who is this? Okay, so it's Julian over here. We'll do intros later, and we have Andy on, and we have Kevin, and there'll be intros later. But Kevin, tell us what the vision was for the thing.
The vision is that there's a lot of tech news out there. There's not a unique perspective for like actual operators running current businesses. And I listen to a lot of news, I read a lot of news, and there's just this missing perspective that I find. And it's specifically from like second time entrepreneurs. And like when I say entrepreneurs, I mean like venture funded ones. Like we're all mostly talking about venture funded companies that are looking to scale high growth. So I think there's definitely something special around people who have either failed companies before or have been successful, but are doing this for a second time versus the first time. Right. I don't know what the fuck's going on. So kind of thought to get some second time founders together, just kind of riff on the daily tech news, do this once a week. And hopefully people can learn some stuff or not.
I'll learn one thing in a 1-hour episode. And then just to give a sense of context, like we have high profile things that we've done, right? Especially from a Silicon Valley standpoint, like Kevin. It's hard for me to understand my own perspective, but Kevin, your thing is high profile. Andy, I know that your thing, your company you used to run before Vowel is obviously still going and still super successful. And then my previous company, Breather, lots of things and a lot of money raised and got it really far and so on. I think that we have a certain freedom, was kind of what I was expressing before, like that you could you can say more. I remember the fear that I had, which I don't have in the same way last time, of being like, oh, well, I can't do a podcast, I can't blog, like in the same way that I thought that I could, because I had a big blog before that, right?
But I thought I couldn't tweet as a CEO.
That's the feeling that you have. So hopefully this gives people some sense of freedom, because I coach CEOs, because of practice, right? My father was a coach, and I have a context of executive coaching, and these people are deeply isolated in a lot of cases. So hopefully it gives people some comfort that their suffering is not like
that's a great
isolated suffering, right?
Totally.
Yeah. And so I'm okay to do this. We'll aim to publish it every week or a couple of weeks, and then ideally it's super low touch.
Cool.
And so we do it. It comes out whichever way that it comes out. Sometimes episodes are dynamite, other times hopefully not garbage, but hopefully
I think we have a lot of interesting things to say, Julian. Don't sell yourself short.
You see, I literally told you not to say this, and you said it anyway. Yeah, I think so too. That's why I invited you to say, but for you to say it yourself about yourself is not so great, but we're going to leave it in this time. Yeah.
It is what it is. You got to have some type of chutzpah to do a podcast.
And to found a company as well.
Exactly. Yeah. 2 companies.
Okay. So Kevin, you brought up this thing about the GoPuff founders. So once just walk us through the context. These are all kind of like high profile situations. You could look them up and get your own perspective. Kevin, you asked us to read it. Tell us about it.
So there was some news that the GoPuff, which is more industry trend of like 15-minute to 30-minute delivery. GoPuff is not doing as well as everybody hoped. So we're coming out of the 0% interest rates. 2021 was an insane year for raising money for companies that did not make money, did not have users. There were just ideas. I think businesses like GoPuff, I'd also say businesses like DoorDash, they definitely benefited in that world of 0% interest rates. But as things have moved up, things are getting harder to raise. GoPuff is definitely not profitable. I don't think anywhere close to. They just did the big story on Bloomberg was around that. I think it actually was supposed to be a cover story and a puff piece, but I think that it turned out to be the opposite, which is kind of funny. And so they're not doing so well. I think they've raised $3 billion. They still have $1 billion in the bank. They were at its height in 1,000 stores. Definitely in the US and I believe Europe. I can't remember which other continents they're on. But I think that, and I have some background in this too, like physical delivery, like what they were doing is GoPuff as a business. They were buying goods. They had their own micro fulfillment centers close to like in city centers, and then they were either delivering stuff themselves or using DoorDash or something like that to deliver stuff. I'm a user of the product. I thought they actually were going to make it out of, there's a bunch of other ones that were trying to win this space. There a lot of VC funding went into them. I thought they're gonna make it out, but it's not looking so good for them. So it's the news in the story broke. The founders cashed out a lot. Didn't say how much secondary they took. They brought private jets. They're still private, by the way. They haven't went public. They laid off a ton of people, and I think this is like the crashing down of the businesses that that existed in the 0% interest rate environment, but like don't actually probably make a ton of sense.
Let me ask you a question.
Alone.
Okay, I think that you're in the center of this type of experience, because your company for a minute, I don't even know how long, was the hottest company on the earth as far as I was concerned, right?
Yep.
And so why don't we just start there? The danger of being a really hot company. Talk to me.
So we were in the on-demand space with my last company, Ship. We raised $63 million. We were a consumer shipping company. We would come to you on demand. We had warehouses.
It was an incredible product.
Yeah.
Thank you. Very complicated. We also had like the highest profile investors, and like John Doerr was on my board. Like we were supposed to be the next Uber, and then it all came crashing down once we couldn't grow out of the consumer use case. There was the market changed. I think this is the same thing that's happening in GoPuff, and you had to focus on profitability, and I think they're going through the same thing. I think also crypto is going through the same thing as well. I think that just venture in general, like as an entrepreneur, you need to understand like they're going for the big hits. They actually, as a founder, you should be looking, like as a second time founder, especially, like you should not be looking to see where like what is the latest trend in VC is as what you should go and do. Like likelihood that those will actually succeed are very, very low. Look at crypto, how many crypto companies failed. In our space too, on demand, there were like I'd probably say 95% of the on-demand companies, they also failed. There was a few that made it out. Uber was one, DoorDash was one, a few other ones, but very small when a ton of venture capital went in there. And then it just gets down to fundamentals, like having warehouses. Like, is that a venture backable business? You have a lot of OpEx you have to consider. And also you have to still do all the other things that an internet company has. You have marketing, you have the technology, you have to build all that stuff, but then you have to actually have physical warehouses. I think the same things happen at GoPuff. I think that venture capitalists here thought that there's just going to be so much demand and all the unit economics would go positive in all these markets, and it's just turning out not to be so.
I'm fascinated by this idea of this 0 or 1 type of company where either it explodes and it's $100 billion or it goes to zero.
Yep.
Right.
That's what VC's bet on.
Ship was one of them.
Yes.
Ship was almost certainly one of them. Breather's not quite one of them. Nanit definitely is not one of them either.
Right.
But you got to wonder how much secondary these guys liquidated. I actually don't even know if that's that irresponsible. Like the demand was there, like all those other things, but it almost, like you're 100% of your own net worth. You're like 1 or 0 or sub 1% of their net worth, and them fueling all this cash. There's this thing about a $15 billion valuation in that article, and I'm like, I don't know if that's good or not. Like, I have no sense as to what it is, like what the value is, but it's almost like when you're in the center of it, like you just think you think you're God.
You do. I did, especially the first time founder, thought I was God. I also did not take any secondary, which was like probably one of the biggest mistakes. Good on them for getting secondary. I think depends on how much they took out. Like if they took out a meaningful amount and now it doesn't matter what the outcome is, that's not good on investors. Right. My co-founder actually, so he took like 13 million off the table. I took 0. It went to 0. I had to start my next company with 0, basically starting over again. Big recommendation to take secondary to just kind of make things comfortable. But you can't fault it. It's capitalism at its best. You have some buyers and people want to get secondary. What they spend it on, like I'm not sure. Private jets before you go an IPO is a great signal to employees or other investors.
Sure.
But I think it actually is smarter. I think the wisdom at that time when I was coming up, like I was talking to Travis from Uber. You look at Mark from Facebook. They're like, never sell a share. Just never fucking do it. I was like, yeah.
But those are second time founders also. Because Travis already had like 30 million or some number from Red Swoosh or something.
That's right. Mark, not so much, but I think that it's smart to sell some secondary. I think it's good to like have a happy wife or and have a little bit of breathing room in case it goes to 0. Because what does a VC bet on you? They're betting on that you're going to return, probably depends on the stage, between 10 to 100x what they actually invested in. And they know that there's probably about a 5% chance that it's going to happen, where you as the entrepreneur, like you're all in. This is all you got. And so I think it's smart to take secondary, but I can't blame the founders.
Look, I do too. I think most founders don't understand the power dynamics and the power law of venture capital. I mean, everyone is betting for you to be the next Uber every time they do the deal.
Right.
I've heard of VCs literally saying, if it's $50 million exit, don't call me. And
it makes sense.
Yeah. And so what they're trying to do is they're selling you rocket fuel. And people need to understand that when you're taking their money, it is rocket fuel. It's acceleration. And so there used to be this really large debate. I was a VC back in 2009. And at that time, everyone was super anti-secondary. But now the market has shifted. Why is it shifted? Because if you're trying to sell somebody rocket fuel and you're trying to get everyone to really swing for the fences, well, you don't want Kevin to have to worry. Does he have an extra? Can he buy his house?
Is that done now, Andy? I mean,
I don't know.
Yeah, no, it's commonplace to have secondary. VCs do not care. I think they actually.
But in 2022, it's still happening. Like,
I think so.
Yes, I think so.
Yeah, totally. Because
I don't think they're buying jets, but nobody wants you to be and nobody wants you to sit there and think, okay, if I sell now at the small exit,
exactly,
then I can make a few $1 million and I don't have to keep going. They want you to keep going. They want you to be able to buy a house.
Yeah.
Those are the opportunities that founders get that they could either choose to go deeper in or not. So like the difference between taking secondary. So say I didn't take any money. I didn't take any money off the table, and I get an offer for $50 million, and it's going to make me whatever $20 million. Like that's a great outcome for me personally. But if I have that $1 million aside and I'm not worried about cash, I'm not even going to spend the time to even like entertain that. now my incentives are aligned with the VC. So I think that VCs definitely have, over the last like 10 to 15 years, have changed from no secondary to like, okay, it's okay to take secondary. I think the market got so fucking crazy that now VCs are like, here's $100 million secondary, which I think is outrageous for a VC. But that's just what the market was like. You had these VCs that would just do it, and then the founders are like, "Hey, why not?"
Andy, did
Founders
you
should
sell
be
a share?
thinking, did I?
Did you sell a share?
I have never sold a share.
You've never sold a share.
I
Why
have
are we
never
even
sold a
talking
share
about
in
Travis
either-
when you're here? You're this person.
I have never sold a share. I have really high risk tolerance. We'll talk to me in a few years and see how it works out.
Yeah,
but I
Nanit is
truly
doing well.
believe-
We're just saying generally Nanit is doing well as a company.
We have a leading market share in the category of baby monitors. I'm not going to give you a revenue number, but it's
No,
big.
you don't have to. Yeah, it's a lot, and you've never sold a share.
I have never sold a share. I am that
I'm-
one founder. I have had
Yeah,
an
it's-
opportunity to sell shares. I have not sold shares.
Yeah.
We'll see.
Yeah,
but
you
look,
don't
if
know.
I was advising a first-time founder and they lived in San Francisco or New York City, and they were getting to a place, a Series B or Series C, and they're thinking of taking a couple $1 million off the table so they can go buy a house or a car, I would tell them to definitely do it. You don't want
Totally.
stress on your family. You don't want stress on your
How much do
lifestyle.
cars cost in San Francisco that you people
Well,
are
I
saying
think like a house in in Palo Alto for 1,200 square feet is like $3 million, $4 million.
yeah,
Don't
it-
quote me. I don't live there.
right.
Kevin, you can tell us what that actually looks like.
Yeah, just call it 2 million for
2 million for a
Mm.
cottage, right?
Kevin
to
lives in a
just-
box.
No, I'm in the East Bay now. I got out of the city, but it's still expensive here. But also, that's what you want. You want, like, if I'm a VC, I also like, so this is definitely a different topic, but I actually would want my founders to be in like the hub. Like, I would want them to be in the city as possible. Like, to go and, like, when I was living in the city, like, I developed relationships with Travis from Uber and Brian from Airbnb, and that was just
Are you
because
going to
I
get
was in the
Travis
city.
on our podcast?
No
Oh my
fucking way.
god,
No
what's
fucking way.
happening?
No, like, I've met him like twice. Like, I barely know him. I know Brian a little bit more.
But for context, your company was that hot.
That's how
right.
hot we were. Yeah, I
Yeah.
could access. So I was having like dinners with like Aaron Levy and like the top CEOs, and it's, you get into this upper echelon, and like just like so many different doors open to you. Also, like, going on John Doerr's private jet, and he was flying me into like UPS's CEO. Like, it's
Yeah.
just, it's
Mhm.
insane when you get it up
Yeah.
to like that hype cycle and you get sucked in. It's pretty dangerous, because the
Literally,
chances you-
I have been an outsider for so long. These situations are just implausible. Like I've heard, like, Zach Sims from Code Academy is a good buddy of mine, and we talk about these things, and I'm aware that they happen to cool companies, but literally never once on this earth. And meanwhile, you have like 10 of these stories, and
Yep.
I have 0. And I don't even. Andy, do you have any? No.
No,
Okay.
I have the opposite. So I was the fancy VC. I am the only person I know who went from being a VC at a large VC fund to going in pain, suffering, and walking on glass to being an entrepreneur. So I worked at Norris
Mhm.
Venture Partners. I have been in the room with very interesting personalities and CEOs of leading NASDAQ companies. And so I've been to those dinners, and I was a young guy. I was the young investor, and
Mhm.
I would try to give some kind of some type of wisdom. And truth be told, I knew nothing and could add zero value. This
We're
was
aware of that, just for the record. We were
just for
aware.
the record, everyone.
Yeah, other crazy stories, like dinner with Leonardo DiCaprio. Like,
What was Leo like? Kevin?
awesome? He was awesome. Yeah,
The fuck
he
outta here.
was. Yeah, he was extremely smart. I think he was, at that point, I'm not sure if he's still doing this, but he was like really pushing like green energy, all that kind of
Mhm.
stuff. But very, like, he'd listen and sat across the table from him, had a conversation with him all night. Like, like Ashton Kutcher was an investor, going to like private, like, Lil Wayne concerts. Like, it just is like stupid when you get
Did
to
you
that
sip
level.
on the syrup?
I did not. No, it was like a private concert for just that, in a small venue. But those are the types of things. Also, like,
Mhm.
got close to Tim Ferriss, who's like, but he's not that, he's like a celebrity probably in the tech world. Like he took taking me out to like different plays, and like it's just crazy when you are like those hot companies, everybody wants to be around you and also
Yeah.
give you money and just be a piece of it, because they've heard stories about like the Facebook the mural person just making milk. They just want it, like it's so crazy. And I don't think it actually is good for founders.
I was wondering whether you would do it again. And by the way, we have a dude, a Canadian investor that we share in common, a guy called John Stokes, who I think you probably remember, and he remembers you.
Yeah,
and he was an early breather investor, and he's an early investor in practice actually. And he was like, could have been me. So I bet there's lots of people at the time when Shift was hot, and maybe at Airhouse, same thing, your current company, that are like, could have been me. I could have been in it. And it was like kind of like,
by the way,
like
he could not have been in it. I would have not taken his money.
I'll tell him that. Yeah.
Well, guys, try selling baby monitors. It's really glamorous too.
Yeah.
This podcast is brought to you by Nanit.
That's right. Nanit.com, I guess. Is that where it is? Maybe.
Yeah.
Nanit.com. We own the .com.
I actually don't think it's helpful to ever be in that hype cycle. I think that it puts you in another stratosphere that you don't get any real value out of. Of course, you could raise it super high valuations. I think that's also a trap. Like, I think it's really good. And also, this is what I did with being a second-time founder with Airhouse. Like, we took as little money as possible. Like, we raised $2 million out of the gate. And like, we could have raised 10 million easily and decided not to. We kept it small. I wanted to like really search for product market fit. That was the thing we didn't have at Ship. We had the hype, all of that, all the great investors.
No, I don't agree. You had product market fit. You had negative unit economics.
Yeah, I'm going to go with.
I consider that's not product market fit, though. You can't scale an unprofitable business.
Okay, fair enough. Yeah, it's semantics.
I would sit there and say, like, I would love your product, but I don't know if I would have paid for your product at 3 times the price.
Of course, but also consumers just don't ship enough. Like, it's not the same thing. You look at the usage of like Uber, DoorDash.
You don't know about my Etsy business.
Sure, we love the customers like you guys, but there's not that many customers like that. It's not, and people would look at the unit economics in the same way they look at Uber and DoorDash, but we just didn't have the frequency of use. And that's why the details really do matter in a lot of these different things.
It's in these details. Like, they never talk about this shit on podcasts ever, right? Like, no one's talking to me about it, because I have people even now in current versions of real estate companies, not WeWork, but like the next generation of companies that I talk with, and I get so hyped, I get so excited, because I still believe in a macro real estate marketplace on a commercial side, which is kind of sort of what Breeder World, but I have so much PTSD from that space,
right,
that I have to keep it at a distance. Whereas, so I can start a company in a completely different area. You actually are still in the same area as Ship was, and so your PTSD is maybe ongoing or something.
I've doubled down. Hey, you spend half a decade in an industry, like, you know some shit that other people don't.
I respect that. I respect that more than anything. Like, that's the real comeback story.
Yeah. But it's not as flashy. Like, we do fulfillment for other businesses right now. Like, it's not flashy, it's not sexy. And
but XPO is a big business.
Sure, but nobody probably listening to this podcast knows what XPO is.
Fair. They've heard of FedEx.
They definitely have. But that's what I think also, like, as a second time founder, like, it doesn't matter if you have that hype, just doesn't matter at all. Like, who fucking cares if everybody knows what you're building? Like, it's hard enough to build a successful business that even like can be profitable at all. So you should do everything you possibly can. And that includes working in like unsexy like areas, or like going against the grain and working in an industry that's not hot. Like, I remember like when I was raising even for Airhouse, like, we would have VCs that I know personally would turn me down even for a pitch, because they're like, oh, I'm too into fintech and crypto. And then you see a big bubble burst in fintech. All of these crazy valuations are now totally reset. Same crypto is in the same place. And it's just like, being in a hype cycle is just, it's not good for anybody. Unless you take some
Yeah.
secondaries and you buy some jets and you're flying around
Right.
everywhere.
Yeah. Started fintech companies, started crypto companies, started AI company.
AI is next right now.
I know.
Right
Yeah.
now.
Well, as I've been corrected on Twitter, it's not AI part 2, it's generative AI.
Yeah.
So
Okay.
we'll
So
go there.
what is the, okay, talk to me about generative AI or whatever the hell then.
So what's really hot right now is these companies that are built on top of GPT-3. And I mean, it's interesting. I wonder if anyone's going to know how to write in the next 5 to 10 years. I don't know how to spell.
Do you hire any writers today? Do you work with any writers?
We work with a ton of writers.
Okay. Yeah, same thing here.
So I think we all work with a ton of writers, right? Is that the same with Airhouse? Or
Kevin, you have a content thing? Yeah.
Yeah, we have a content team. Yep.
We all have a content thing. We all have a content strategy. And I think what we're seeing is these tools like Copy AI and Jasper, they're making it so that you can you fill in a prompt box and you don't need copy. It's going to, a generative AI model is going to spit out copy. They're all built on top of OpenAI's GPT-3 model. And you're then starting to see it in audio and video. So maybe and do we need to generate stock photo anymore? Or are we just going to put into a prompt, generate 3 people for my website? It's very interesting. It's very wild. I mean, I think we saw it on social media with deep fakes. This is just the next evolution.
I gotta ask you, do those photos scare the shit out of you when you see them and they're like slightly off? Because to me, they give me panic attacks when I see them.
They're scary.
There's like something Terminator about it, right? Like the machines
are
coming.
They are.
Way worse. It's horrible. It's horrifying.
But this is the next hype cycle. Like I would argue, there's no true use case for this. Even Copy AI. Do you know what their actual revenue is?
I've heard it's
$10 million. $10 million. 10 million ARR they're doing, and they are now like that. I think that they're they probably have the most revenue in like AI as a category right now. And now you probably see companies that are getting like, I don't know, like 200 or 250, 500 million post on like just some like maybe like I don't know, hundreds of users or something like that. Like there's just is there a real use case that people use? I've played around with Copy AI. Like, yeah, it seems cool, but is it good enough? Is better than a writer? No. I look at all this stuff as like a research. Like, honestly, like I look at generative AI as like, could it be cool someday? Sure. Could it? Maybe there's this one use case that makes sense. Like, I think that crypto had Bitcoin. Bitcoin's a thing, right? So I think that there's definitely always, out of these hype cycles, something comes out of it. What's going to actually come out of this AI piece?
So I do think, though, I think the bet that investors are making is this is all built on GPT-3. It's a model that's 2 years old. And so there's another model coming. And is it just going to get significantly better? I actually do think on the writings, let's divorce the two concepts, images versus text. I agree with you. I've tried Jasper and I've tried Copy. Tried them I was playing with tweets with them the other night, and my tweets were always better and funnier than when I asked a bunch of people. But in 3 or 4 years, are these models going to get better? I believe so. In terms of NLP in general, we're 5 years, 7 years behind computer vision, and computer vision's got pretty good to the point where we start thinking very seriously about self-driving cars and other applications. You're talking to a guy who built a baby monitor that tracks breathing, sleep, and movement from computer vision.
That's true.
And my current company, Vowel, I am very excited to see where NLP goes. So my bet is this is going to be it'll be a very interesting product category in 5 years. We will see. You are literally betting on the research of OpenAI.
Okay, and then the bet for investors is so different from the bet from founders. The bet for investors is I'm gonna bet on 5-10 of these. The bet, if you start one of these companies, is am I going to be one out of the 10,000 companies?
Yes.
And am I the one? Because like I was a different version of an on-demand service, right? But Breather started as an on-demand service, and we were very lucky that a corporate use case emerged that was the company. That was the whole company. But I just didn't know that. And on-demand services, it was an explosion of things. There were like 10 laundry companies. There were the parking companies. There was Ship and the Ship clones. I'm sure there's a bunch of them. And it turns out the unit economics only worked for like 3% of those companies.
Yep.
And so the bet on the predictive AI, for me, it was, when I look at companies like this, I'm just like, I'm not that founder. That's like, that's how I think of how I'm going to start companies. Like, am I really going to be this consumer dude who's going to build like a chatbot? Like, no, I don't have it.
The risk
Am I
is
really-
too high.
It's it just has to be like a perfect storm of everything going right.
Yes.
Maybe a misunderstanding that people don't have, right?
So
And
I think
that's-
that's the interesting dichotomy though between you all and me.
Yeah.
I have that first company that is humming along. It's still
Right.
going. It was
Consumer product goods
consumer
company. Yeah.
hardware. We are the only company from that era who has actually made it this far, and we have dominated our category. And maybe it's a lot of luck and a lot of hard work. And so now I'm trying to sit there and say, okay, there is a 30-50 billion dollar opportunity in video, and I want to be that company. And so it's very interesting. I think about it all the time, and I talk to Julian about it all the time, about my own insecurities about it. But I'm going for it. So
I was going to ask you whether you ever feel the perception. Like, I had a funny thing, because I was successful writing books and speaking career and all these other things, and then I was like, I'm going to start a business. And I was like, wow, it took off. We raised money. People use it. I was like, okay, so it's not just luck anymore,
Right.
Like, I must be good to some degree.
Totally.
I was
Totally.
wondering if you ever confront that thing of, oh, I'm actually like, am I lucky or am I good?
Ooh. So, I mean, Michael Mabasian has a book out there that I've read before, and I'm probably butchering his last name. It's about luck and skill, and it talks about different games. I think in general, venture capital is a game of luck. I don't know if I'm good. So we set out to build a company in the video space pre-pandemic. Is that luck or is that skill? That's probably luck. We made a bet on remote work and distributed work pre-pandemic. We made that bet in 2019. Nanit was distributed. That's the reason we made that bet. Is that luck or is that skill? I thought it was going to be a growing market. At Nanit, we bet on the evolution of computer vision and an insights layer, because we had seen what had happened with Dropcam, Nestcam. Is that luck or is that skill? I try to find ways where I see a trend, and I try to just execute as hard as possible. I think everything in life has an aspect of luck. I don't think anyone is going to sit there and say, I think venture capital, when you're deploying a fund, is to a large degree probably a luck game. I think if you go then on the opposite spectrum, which is private equity, when you're buying a company and you can't lose money, that's a skill game. You're sitting there and you're looking for the perfect pitch. Or that's the Warren Buffett investment. And I think that's totally different than I think a lot of folks think about venture capital, where you don't have a concept of product market fit in any other type of entrepreneurship besides VC.
What do you mean by that?
So I mean, when you're doing investing in later stage businesses, it's all execution. That's all it is. It's not wondering about product market fit. Is this going to actually work? So I mean, Julian, you're making software for coaches. I'm an investor in your coach business. I believe there's an explosion of coaches, but now you have to figure out the exact feature set that coaches want to pay for. Kevin, I know a little bit about your business. I'm not an investor in it. You make it's logistics and warehouse. We all know that's a great. I think you probably know from day one you have most likely product market fit. It's an execution game. I'm going after a video space with a lot of very interesting players, and we're taking a very differentiated approach. And I think we have product market fit, focusing on searchable, shareable knowledge. And that's what I believe comes next in video. But I think in venture in general, it's the only type of entrepreneurship where someone's going to give you $3 million for you to go test a theory, and it's okay to fail. And I think a lot of founders don't understand that when they take that money, that the assumption is probably you are going to fail.
It is.
Yeah.
Whereas like I have friends from business school who go out and do search funds, and the assumption is you have to succeed and you are going to succeed and you're going to make everyone money. That's what
Mhm.
everyone is giving you money to do.
Right.
Different type of that. The guy who does micro acquire is that type of guy.
Hmm.
He is that type of guy. Yeah. And so it's you. The feeling is the bar is lower because they still have to find one. They have to find like one of those bets, right? But the bar is lower because you just lose the money now 9 out of 10 times. So it's like, fuck it. You only need to be lucky.
I don't know.
I think there's definitely more in like the top quartile of VC. I think there's definitely more than just luck involved, right? Like I think that there's a lot of VCs chasing a few amount of deals. So like it's so like the ones that aren't like in my mind like research or like just like the super like I was at Ship, like there are some companies that you just know are just gonna work. And like you can see it either through the metrics or also the founders as well. Like that's why also I think it's a very smart bet to take like invest in second time founders, especially ones that have failed companies that have a chip on their shoulder.
Andreessen literally has this thesis, by the way. They literally are like the person who almost made it. That's one of their theses.
This is Parker Conrad from Rippling, right? Like this is exactly it. Like I think that you see like a level of like grit and determination for them to get to some level of success in their first thing. Ultimately, like Zenefits was not successful from a venture perspective. Like they sold, I don't know for what, but nowhere close to what their valuation was.
Right.
But Parker was kicked out of his company. And now he's just like on like I think he even calls it like he's got like vengeance for like his like next thing, and he's basically replicated what he did at Zenefits, but now adding on so much more, and like just his level of grit and determination. So if you are the VC that actually can get access, I think there's a certain amount of access in VC as well. Can you get access to it? But also, can you see a lot of like make bets in these types of people? I think the other ones that there's like in 2021 specifically or 2020, like how many crypto funds like came out and they just had that thesis and investing in, I think all of those are going to be like underperforming. Like I think you still like it is there's going to be one or two use cases out of these hot hype cycle companies, and that's going to be really it. But there's going to be a solid amount of like really great businesses that are going to be like Rippling is that were
I'm convinced that that's Travis. The last name is Kalanick.
Yeah.
Right. I'm convinced that is where it came from. That is where the aggression of Uber that was needed to win came from.
Totally.
It's the first time was like, oh yeah, sold it for 30 million. Like, it's okay, but I thought it was going to go better.
Got sued to shit too. Got sued to shit. Yeah.
Yeah, that's it. But kept going. Like, I don't give a fuck. I'm going to keep going. It doesn't matter. The feeling of I had it and then I lost it.
Oh, it's the worst feeling in the fucking world.
I have that feeling for sure.
Oh,
right,
man.
When you look back at the thing and you're like, but this. I was wondering, do you feel like there was a shot at making Ship work? By the way, I still believe that Breather and that type of business is certainly actually possible, and that it could and ultimately will turn out in some variation to be a real business. Yeah. I was wondering if you think that your first thing, Ship, could ever have been a real business actually, and whether there was a path.
I think it could have been a business. I don't think it could have been a venture backable, returnable business. I think if you really focused on building a profitable business, like a lot early on, took a lot less like capital, I think you definitely could have been, but it wasn't going to be like a $500 million revenue business ever. I don't believe in that at all. I think our goal there was like, we thought we were going to be the next generation FedEx or UPS, and we were taking a very unique approach at it. And I think that we had differentiation on like consumers, but other than that, like businesses where we thought we were going to like go up and actually win their business, they really they care about costs and like level of quality. And like we just couldn't compete with that. Like the economies of scale of like the incumbents were just so strong that we actually did not have anything differentiated there. So I think that's also another major learning for me, is that go to fucking market with a thing you want to scale. Don't, like, there's so many people, like I'd use like the AI as an example of like,
Okay.
it's like we start here and then we do this, and like, and then the second piece is like, actually that's the business, but no, we need to spend
Right.
like 5 years in this first phase. That never fucking works. You got to have what your product is like when you start scaling it. So like when you think you've found product market fit, that needs to be the thing. It can't be that that's the stepping stone to get the thing. And it's that's a massive learning. But
That's
I
actually
thought,
that's a great way to say it. It's because you do see that a lot. We see a lot of VC pitches, and I do. Y'all probably do as well, where it's like phase one, and the on-demand space
Yes.
definitely had that, but they
Yeah.
still have it. First, I have generative AI, then question mark, then 3 profit. Whereas it's like, let's start with phase one where it works in these businesses, and then you have these people that are on consumer social, and they're just great at consumer social. Like, you can say what you want about Rohan and fucking Paul from Clubhouse,
yeah,
but these people will just go again and again and again.
they're good. Yeah.
Trying to find a to infinity version of the. I'll never be that person.
Right.
There's a part of me that wishes, like, I still love Twitter, like from the very early days. Like, I'm obsessed with social. I wrote books about social media, but I don't know that I'm that good as a founder ever. So I need to start with phase one, like you're saying. Phase one, it works. Phase two, it also works.
What does it mean to be good as a founder? I mean, literally, what are we talking about here? You're talking about the ability to just take the pain and iterate?
No, not the psychological aspect. What I mean, it's a good question. Is just, no, I mean good as a founder in a certain space, like good at hitting a certain market. Like, was I the real estate founder? No. Did I start a company in real estate by accident? For sure. Was it founder market fit? No. There's a dude, Francis Davison, adjacent to me, like started in Montreal the way that Burrito started, but did it in a fucking residential instead of commercial, and it turned out to be Sonder, which went public. It's not the biggest company, but it's a successful version, and he did a fucking master's in real estate before that, so he was way more that guy. Whereas for me, what I mean by good as a founder is not the grit and the perseverance and the ability to recruit and like all those other things, but rather whether you are willing to go at that space for 10 years and you have a unique perspective like Kevin does about Air House, for example.
Makes sense. Makes a lot of sense.
Yeah, I think but I also like don't discount being good enough. Like I think Andy, what you mentioned as far as like having grit and like perseverance and like willing to iterate and being focused on your customers, like that's what actually makes a good founder. Like I definitely think I could start in another space. Like the way that I look at it is like, startups are so hard to make work. Like I try to reduce the amount of risk whenever I could. That's one of the reasons I moved from Canada to San Francisco. Just like, I think the likelihood of me succeeding is going to be higher if I'm in San Francisco and like the heart of it. Another thing, one of the reasons I wanted to stay in transportation logistics is like, I think I have an unfair advantage seeing this industry, but I also think that I could start another company in another domain, because I think that what I possess, like, I don't fucking give up. I will never. Like, I also am like so driven by customer feedback and iterating and all that stuff. I think that even go back to our earlier point of VCs, if you could recognize that in somebody, like, just bet on them, just give them money all day long. And like, as long as they don't get as long as they don't get caught up in the hype cycle and just like fucking go crazy, which I think, honestly, I think Uber to a certain extent did that. I think they could have had a much more profitable business, potentially larger, if they actually focused more. I think that you should bet on those people, because those are, I think we kind of take that for granted. Like those attributes of a founder, I think, are very few and far between. I think there's a lot of people that see it as like very glamorous and it's like just fun and like, and they see the headlines and all that, but they're not willing to put it into the work, and they're not willing to go and like iterate for 3 years to try to find product market fit and go in those customer calls and close that big deal and fly to that person or do whatever. I think those are skill sets, and that's why I think there are so the percentage of successful startups are just so few. I think it's a really hard skill set to have as a founder.
The number of founders, like very high profile, exited 8+ figure like personal net worth because of their companies, people that I know that are like, why would you do that again? There's a lot of them. And we're talking about people that were successful.
Right.
They don't even have the negative grind of like, oh, I grinded on nothing for 3 years. Then I raised a fund, then down round. And then I'm trying it again. They had a successful version and they're like, why would you ever do that again? Right.
Look, I
Like
want to be David Duffield. I mean, I don't know if anyone knows the story. He was PeopleSoft, and then he sold that for like 11 or 14 billion dollars.
Mhm.
And a couple years, he sold it to a couple years later, he started Workday. And I don't know what the
Right.
market cap of Workday was 50 billion. And after Workday, he's got another one. I forget the name of it, but it's something also ERP software. And the guy's probably 80. That's who my role model is.
I'll be
and
the
my old boss was on his
logistics
board.
version of that.
Look, I'm doing video. I've done video my entire career. We at Norwest,
Right.
we specialized in investing in video. We invested in Blue Jeans and Life Size. Nanit streams petabytes of video a day. And we did this all before Google really pushed WebRTC as a standard. And now it's Val we're doing video. And I strongly believe that video has been looking for a killer application for the last 20 years. And
Wait, but you think that video has not found a killer application yet?
video
Literally
conferencing,
everything.
video meetings, it didn't have a platform shift and find the killer application until 2020. That's when it happened for the majority of people.
You think so?
It was-
I remember using Zoom in like 2016.
You're the edge case. Now
Okay,
it's the
maybe
rest of the world
maybe,
thinks
yeah.
about it. We had a platform shift. Everybody who works, everyone thinks about video.
Yeah, that's true.
And so
You know,
I
you know
spent
who I respect? This is not my subject, but to be clear, you know who I respect the shit out of, even though I hate him?
not me.
I want to hear it.
Evan Spiegel.
Yeah.
Yes.
Because
Yes.
so first of all, 20-something marries a supermodel, like literally, like his whole life is lining up in front of him. Okay, and I'm just like, fuck this guy, like fuck this douchebag, fuck him. I don't know him from like literally, I don't know anybody who knows him, nothing. But like, I just hate people like that, where their life just like
It
happens.
just seems that it just happens.
It's
yeah,
like
but
a
I
miracle
respect him
story.
so much because everyone
Now-
wrote him off so
Now-
many times.
Yeah. And also because his obsession with the idea of the camera, this idea of, oh, it's like a camera is an incredibly important like object, right? Like transformative things are going to happen with the camera on your phone, the same way the transformative things happen with GPS and turn into Uber that we keep using it as an example, right? Like, and this guy just keeps going and going and going. And anyway, so it's
Look, I respect
obvious-
him. I bet my life on video as a media. We'll see where it goes, but I bet my career on it so far. We'll see what I do next. But everything I've touched so far has been video.
It's I don't know, you know, I don't know, maybe I will say my closest version of that is my whole career I've worked for the little guy as a customer. That's the
Yeah,
closest
but you're a
version.
coach and you're the
Yeah.
guy, you're the individual I call. I have an exec coach and she is absolutely incredible.
Yeah.
And every now and then I call Julian just a bitch because Julian's like the best listener of anyone I know. I literally
Great
called
skill.
him last week to do this, to complain about somebody. This is what happens when I invest in your company. I get to call you to complain
call
about
me.
random people.
So the final thing that we decide to bring to the table is this idea of the letter that the Twitter employees wrote
Yes.
to Elon Musk. So first of all, I hate talking about politics. So first of all, I'm not American. So when we talk about politics, inevitably they're like, he's Canadian.
Am I
he
the
doesn't
only
understand.
American here?
I'm American
the only-
now. I got my
okay.
I
Sorry,
have my
sorry.
citizenship.
I heard that you were from
I'm dual.
Canada.
I'm from
Cool.
Canada.
Walk off.
Yeah.
Yeah. So yeah, I'm not allowed to talk about politics, but I also hate how it degrades. But this is edgy on the edge case of politics because Twitter and so on. But I wanted to get your understanding once you had read that letter from Twitter to Elon Musk. Now that this buyout or whatever is happening, what your perspective was as a
So
repeat founder.
give an update for everybody. What was in the
What
letter?
is the letter?
Right. What's the letter? Okay. So the Elon Musk it's confirmed that he is going to buy Twitter, and the news is
Hooray!
he's going to
He's gonna
sell.
make it great again.
He's going to fire 75% of the people on staff. So first of all, that's gigantic, right? I think
Massive.
Twitter employs what 10,000 people, some very very large number of people, and so they write an open letter talking about how they're protecting civil discourse and all of these other things. Now, I've gone back and forth on the subject, but when you read this letter, what did you think?
My first thoughts are, for one, I think it is. I'm just looking at the numbers here. I think it is close to 10,000 employees. I actually don't understand how you could have 10,000 employees running Twitter. I definitely think that there doesn't need to be 10,000 employees running Twitter. So from like Elon's perspective, like, he's coming in and he's like, we could go a lot faster and we should be competing with more Facebook, and like the user growth is stalled, and also like this bot problem and all this. And he just looks at how much they're actually spending. And I agree with them from the outside, not knowing anything, being very naive. I don't know their business. I think definitely there was like, I think all major like startups now, public companies, I think they did try to like just drain all the talent from the ecosystem, so a lot of people couldn't compete. So I think that all of these companies are bloated. I think that like, do you need 10,000 employees to run Twitter? I don't think you do. I don't know what the actual number is. So from Elon's perspective, I think that it makes a lot of sense. You could probably, especially with outsource everything today. From an employee perspective, like, for one, if you don't want Elon to, like, you're smart as shit if you're working at Twitter, just leave. Like, don't write a letter, just go. Like, why? Like, you do you actually,
why do you want to suffer the abuse if you're working there?
Do you honestly think that him reducing it by 75% is going to hurt civil discourse? Like, I don't think that's the case. Like, I like, just vote with your feet and just get the hell out of there.
I'd love to know what the 75 is. So personally here, I don't know enough about Twitter. I mean, I use Twitter. I don't know anything about Twitter as a company. So before I'd answer this, what do the 10,000 people do? Like, seriously.
Nobody knows.
Are they
Nobody
engineers? Are they content moderation? And my camera just died. So
Who cares?
So there's definitely, obviously, engineering, right? And actually over the last like year or two, they actually have started like playing with more features. Obviously, there's always going to be product development. That's a very small percentage of that. There's obviously ad sales. So like that's a thing. You actually do need to have people. You need to have like actual account reps that are selling all this stuff and doing all that and building the products and courting larger advertisers and all of that. That makes sense. Then you have like content moderation. So like, you would hope that a lot of this would be built into the product. I think that it definitely is harder than it appears. Like, if you do think like every major politician's on Twitter, like,
is content moderation though even an internal team, or is that outsourced to some like BPO?
No, they have people internally that do it too.
They
don't do a lot, but they do. I think there was a story about like, they did a content moderation like a triage, and they pulled out of like 15 million tweets, they reviewed like 5 or some crazy low number. But yes, they have an internal content moderation team. So there are things that they do, but I and there are consequences, right, for doing it wrong, because I don't know, all the Nazis or the bots will take over or whatever, right? And those are real things, but it's I don't know. When I looked at it, I was like, there's not 10,000 people that have high ownership in that business.
No,
There's
also,
Yes.
do you guys remember how many employees Instagram had when they were sold to Facebook?
wasn't it 15?
So it's 6, 7, or 8.
Yeah,
Yeah.
WhatsApp, I think, is the better example. Is like 30
21
or
or
something because it had
30.
so much more scale.
How many
Yeah.
billions of like
Mm.
those obviously different products, but I think definitely Elon has a point here. And I also like as somebody building a startup, I think that you just can move faster, make faster decisions as a smaller team. So
Mhm.
even as far as like their product development, like reducing it could make them go faster. I think that they're going to have a massive morale problem for probably ever.
Oh yeah. Oh yeah.
Yeah.
No doubt
I
about
don't know
it.
if
But
this is the
look,
best
does
move.
Tesla have a massive morale problem? Does SpaceX have a massive morale problem?
Probably.
I don't know. I don't know enough about his. All I know is he delivers. And I'm not going to say. All I know is he builds cars, he builds rockets, he builds Starlink, he builds products in really complicated, hard tech industries.
I think to the average
I don't know if he'll be
listener-
successful here.
No, nobody knows. No, for sure. To the average listener, if you've been grinding, like I've been grinding as a CEO of venture back companies for around 10 years, probably the two of you are around the same amount of
Yep.
time. It's just like it's very. I'll give you an anecdote. ZocDoc. Do you remember ZocDoc? Do you remember this
Yeah.
company?
It's still going,
So-
right?
I think it's still going. So one of the founders of ZocDoc, I had a long-standing thing because it was right in New York, like right across from me, right?
You lived
And
in New York?
fuck you, fuck you guys. Yes. And across from my office though, and so we would meet all the time. And I was like, I don't know if founders are really like special. Like, what really happens? Like, if there's no founder in a company, and he was like, it dies. I was like, what do you
I
mean it
believe
dies?
that. I believe
He's
that.
like, it fucking dies. And I did not really believe in what he was saying. Later on, I came to realize for lots of different reasons that actually like what you need is at least one insane ownership person. And if you don't have one insane ownership person, then you got a big fucking problem. And I don't believe that there's a single insane ownership person at Twitter left.
No, there's definitely not. But also, can you beat? I don't. Is there any examples of a non-founder taking over that role? I guess Tesla is actually an example. Like he didn't start Tesla,
because he didn't start Tesla, but the another one is Snowflake.
but he basically
Snowflake
did.
is
Yeah.
Snowflake
Snowflake's
is
a good example.
Slootman has executed a ton.
Mhm.
Nanit is run by an incredible, amazing operator who we brought in a while ago. Sarah is absolutely amazing and has just executed year over year. So I'll be the odd man out here and say I have seen strong success, but you need to have somebody who is a strong operator. It's not you're not
Mhm.
looking for somebody to coast their way through.
How did you recognize that she was super high ownership, super strong operator?
She's gritty. She's really gritty.
But what does that
She's-
mean? We're on a show. Tell people
We're on a
fucking
show. So how do I describe
Yeah.
her? She's an incredible marketer. She's an incredible talent allocator. She understands how to identify what aspects of the business need to be upgraded. She understands what part of where she needs to fill holes, and she knows how to run aspects of the business that she needs to jump in on. She knows how to run marketing. She knows how to run sales. She was head of e-commerce at Bye Bye Baby. She knows our consumer base. She knows what to do. And where she doesn't know, she puts in place incredible leaders. And look, there's a reason I haven't sold a share, and it's because of her.
Wow. Okay. That's very high praise.
I definitely would take the other side. I would bet on the founders more, the founder-led companies, just as a class. I don't know. There's just something about like employees will look and listen to the founders. They can just get stuff done that you need to get a lot more buy-in from like an experienced manager until there's like a tipping point, obviously, until that person is like realized as the new founder, as like Elon is in Tesla. But I think as a founder, you definitely can make decisions a lot faster. I think that you have an attachment to the business that probably nobody else has. Like you were the one or people that started it. I don't know. I definitely tend to lean towards that the more innovative companies that are the ones that are still founder led. Now you get to a certain point, then it is just like running the business and all of that. But like, just like, let's use Twitter for an example. The level of like innovation, like, and
Wasn't
you
Twitter
can't.
founder led at the end though?
Well, not really though.
I
I
mean,
don't think you can consider Jack. He's running Square and also Twitter. Like it was at that it was passed off so many different times. I would look at Uber as a great example of like what happens when an amazing founder like Travis steps away and you get somebody that is like a professional manager in there. You have Dara. I'm sure he's awesome, but I think that they missed out on like the Uber Eats business completely. They missed out potentially on Cloud Kitchens, which is Travis's new business.
for sure.
He would have done all of that within Uber for
He
sure.
would have. You're right. Yeah. But
So
I mean,
here's
it's
my
unique-
question to you all. If you had the opportunity to get Frank Slootman to come in and run your company, would you do it?
Yeah, yes.
No, no,
Yeah.
Ooh,
no, I wouldn't.
No. I mean, sorry. Wait. Hold on a second. You're asking me if I believe in Frank Slootman or if I would walk away.
if you'd let him be, would you want to hire him as CEO to run your company?
I don't. It's wrong. What I'm expressing is he really. There are super strong, unique operators like him that have shown it again and again and again. Has he ever done it with my type of business? Definitely not. Has he ever done it at this early stage? Neither.
Data domain. He did
Yeah.
do it at this early stage.
That's so. What was Data Domain again?
Storage. He joined as, believe he joined pre-revenue.
Okay. Yeah. So I mean, it's, I guess for me, what I'm expressing is I do believe that these operators exist. I think they're rare, probably not for my company and where I'm at. Maybe at some point you could see how it's theoretically possible, but not right away. No.
I would say no, probably in like an unhealthy way of just like I have so much to prove to myself and other people that like I just gotta do it myself. There's no way that I'll hire somebody to replace me. Like I could not ever see that happening.
Yeah, I mean, it's a very interesting perspective. I don't know the answer.
But we agree that there's not a lot of these people, right?
Yeah, and I mean, there aren't a lot of these people.
Well, I've also like I've seen definitely the counter. I think this is like the exception to the rule. Like you see a lot of like professional managers that come in to run these businesses and they just go to shit. Like they are just like they're trying to protect mostly for the downside instead of like a founder is like you typically get like that is like somebody that's looking to really like continue to innovate and wants to do things that people are not thinking of, and that's why you see like this is why some of the VCs have let founders have like insane share structures, which is maybe another topic as well. Like,
Right.
should you give the founder these insane share structures that like the public, when they go public, that they still have like carte blanche to do whatever they want, like Facebook still does. Like, do they have a different view? Do they or do they have a unique way to innovate, or I don't know what it is. I definitely think that founders are much better leaders of businesses than like the professional managers, but obviously there's going to be exceptions.
It's all under this one phrase, and maybe it's a good place to close. It's the phrase of alignment, right? It's like founders provide this insane, unique alignment as a result of complete and total historical knowledge of the business, understanding of every mistake that's ever been made, knowledge of probably every employee and why they've been hired and fired to a degree, and understanding as to why certain markets will work and certain future markets won't work. And like, there's just like so much information that you accumulate over time. But you got to still care about the space. So it has to be a space you really care about.
Well, I think also you have to have a founder mentality. I think there's a founder mentality, and
Totally.
that's so different than folks at big companies. I was talking to a friend who worked at a big company and works at a Fortune 500 and is pretty senior there. And he said to me we hired the wrong person and I don't know what to do. And my response back is, if you have the wrong person in the
Fire
job, you
them.
have to get rid of them. And he said, well, we don't really do that here. And he was like, I don't understand. What do you mean you don't really do that here? He goes, we've never really fired people, laid people. They've done
That's
layoffs,
insane.
but he was like, we don't have that type of culture.
Mhm.
And I was like, well, go to HR, tell them they're not the right person, and
Yeah.
and do it. And he looked at me like totally puzzled.
Wow.
Whereas I think you read Frank Slootman's book, and
Yeah.
he's constantly looking to do that. And so there's this founder, there is this
He's trying to
founder
fire.
type
Love it.
mentality.
Mhm.
And then there's this, like, I guess what happens when you work at a Fortune 500 in America mentality, where you're literally rearranging chess pieces. And
you're just
maybe
trying to
that's why
protect your-
private equity can exist.
You're trying to protect your job too. Like you're not
Yeah.
paid. You're not paid to take the chances, right? Like that's
Right.
like you actually get punished. Like if you take a big chance and it doesn't
Mhm.
succeed, you are probably getting fired. Versus like a founder, it's not the same thing. Like
So
you're-
is the incentive structure wrong for when you bring in a CEO? Do they need to have really high equity incentive and cash
Would-
compensation tied to like valuation increasing or an IPO or something
yeah,
like
but
that?
of course, yes. But there's also just the expectation, like they can't make like you can't bring in a professional manager and they can't make it worse than they came in. Like I don't know. There's like you just look at like Dara, what he's done in Uber. Literally nothing. He's just done some financial engineering and then got the company in a little better space. He hasn't done.
I mean, the
anything.
support has only gotten worse on Uber Eats. I mean, I had a delivery
Yes.
last week where I got one of 3 things I ordered, and they told me they would not give me a refund, that I should deal with the driver.
Right. And you see, like, I think that what they're even negotiating with some like labor unions and all this stuff, which I won't take a stance on unions, but like, is that the best thing that they should be doing, or should they be doing the best thing for the actual end customer? I don't know, but DoorDash is a hell of a lot better of a service and they have exactly the same product.
DoorDash is amazing in comparison
Wow.
to Uber Eats. It's wild. It's night and day. It's
It
like
is.
DoorDash, my food's not hot. Here's everything free. Uber, the food never came. We're gonna charge you anyway.
But it's probably because when Dara got brought in, he had to actually like get the company profitable, take it public, all these different things versus like just going for growth. And he did a lot of those things, but he probably like didn't like he probably tried to get the unit economics he focused on there versus like creating the best experience possible. Like I just think that the incentives aren't totally aligned.
Well, if
and
you
I
don't
think
give refunds for when you don't deliver the food, it's definitely more profitable.
that's true.
You guys,
Leave it there.
this is a good place.
All right.
That's it.
This was
I
fun,
got a call to
everyone.
go
You
to.
guys,
We
this
have
is
real
number 1.
jobs on this show, and we'll record and we'll publish, and we'll do it again next week. Let's see what happens.
All right.
Thanks,
see you guys.
everyone.
Bye-bye.
Bye.